Good morning, students. So here today we will start the model 5th, that is liquidation of company accounts. So here this is the last model in corporate accounting 1. So here this is the 61 session, and here in this we will study the meaning of liquidation. Here a company is formed by law and its existence will be terminated by law. Here the company can be opened or started, and also it will be terminated by the law. It means company's existence and termination is according to law. The liquidation or winding up the company means the termination of the legal existence of the company by stopping its business. Here the termination means here stopping the business activity of the company. Here it is the suspension or closure of the legal existence of the company. In other words, liquidation means the life of company comes to an end. Here, when the company is liquidated, automatically its life of the company will comes to end. It means closure of business. When the company comes to end, the life of the company comes to an end, it means closure of the business. When the company is liquidated, the assets are disposable by the liquidator. Here first work of liquidator is disposing the assets, and after realizing or sale of asset, it is utilized for payment of debt and the liabilities of the creditors. So here if any money left after liquidation, that is after payment of the debts, such amount is distributed among the members of the company, that is the shareholders of the company. Like this, in short, liquidation means it is the closure or winding of the company. When the company is winding up, for completing the legal process of liquidation, the official receiver or administrator is appointed, is known as liquidator. So when the company is winding up or liquidating, at the time of one official or administrator is appointed, that administrator is known as liquidator. He takes control of the company. Here at the time of liquidation, the liquidator takes control over the business, collect and pay its debts, and finally distribute the surplus among the shareholders. If any among the members, the legal process through which a company is wound up is called liquidation. Here, according to legal process, if the company is closed, such legal process is called as liquidation. The two terms winding up and liquidations are same. So here they are used interchangeably. Methods of winding are types of liquidation. So there are mainly two types of liquidations are there. One is voluntary liquidation, second one is compulsory liquidation. So here first of all we will select voluntary liquidation, when winding up by the members themselves without the intervention of the court. Here only the members will comes together and sit together and make a meeting, and then they decide to close the business. That means if the members are voluntarily liquidate the company, that is called as voluntary liquidation. According to section 48U of the Companies Act 1956, a company can be wound up voluntarily under the following circumstances. But first of all, following circumstances means by an ordinary resolution of the members passed in the general meeting. Here the circumstances when all the members of the company will meet together, sit together, and they decide to liquidate the company, and the about resolution is passed about the ordinary resolution is passed in the meeting about the liquidation of the company, where the duration of the company was fixed by the articles of association and period has expired. Here at the time of existence of the company in the registration, articles of association, the period or the lifetime of the company is mentioned. If the lifetime of the business or company is going to be expired, then automatically the company should be liquidated, where the articles of association and period of winding up of the occurrence of here occurrence of anything, that is at the time of the expiry of time, the company must close and it is wound up. So types of voluntary liquidation. Voluntary winding up is of two types. One is members voluntary winding up. Here members voluntary winding up means, first of in voluntary winding up we have seen all the members will come together and decide to close the business. So here without intervening the court, they will not concern court about the winding up of the company. Here members voluntary winding up means if the company is solvent. If the company is solvent means company is solvent, it is having strength to pay back all the debts, and here if it is able to pay all the debts, the director make declaration about its solvency. So it is called as members voluntary winding up. The declaration must be verified by the affidavit. In case of members, will appoint liquidator and fix his remuneration in the general meeting. Here, if it is members voluntary winding up, that time all the members select or appoint and liquidator to liquidate the company and fix his remuneration in the general meeting. So creditors voluntary winding up. Here creditors voluntary winding up means if the company is insolvent, it is not having strength to pay back the debts of the companies. Here director will not make any declaration about its solvency. It is called as creditors voluntary winding up. In case of membership voluntary liquidation, director will make a declaration about its solvency, but when it is creditors voluntary winding up, he will not make any declaration of the solvency. It is called as creditors voluntary winding up. In this case, a company must call a meeting of its creditors for passing the resolution for winding up. In that meeting, the appointment or nomination of the liquidator as agreed upon by the creditors, not by the members. So the liquidators has to call the general meeting annually of the member in case members liquidation, and a meeting of a creditor in case of creditors liquidation, and place an account of dealing before respective bodies. They will tell their opinions before the respective bodies, and the liquidator has to prepare a final statement of liquidator. So here compulsory liquidation. So second type of liquidation is compulsory liquidation. It takes place when a company is directed by the court. As per the order of the court, the company must liquidated. So here a company may be liquidated by the court under the following situations when the company has to be closed as per the court order is studied as under. First one, special resolution of the company. If the company has resolved that the company be wound up by court by special resolution. By the special resolution, if the company is going to be liquidated, then with the court's resolution, the company will be closed. Default. If any default is made in delivering the statutory report to the registrar, if the company fails to deliver the statutory report to the registrar, at that time he will hold a statutory meeting. In that meeting, compulsory liquidation will take place. Not commencing the business or suspending the business. So here, after registration, after a period of 1 year, if the company is not able to commence its business or business activities, then it is compulsorily liquidated. Reduction of members. If there is the shortage of numbers as per the Companies Act, there must be 7 members for public company and minimum 2 members for private company to start a company. So if the members number falls under 7 in public company and below 2 in private company, automatically the compulsory liquidation will take place. Inability to pay. If the company is unable to pay the debt, that time the company is compulsorily liquidated. The just and equitable clause. Here, if the court is of opinion that it is just and equitable that should be wound up, if there is any court order for the winding up, the company should wind up. In case of compulsory liquidation, statement of affairs of the company has to be prepared in a prescribed form and it is submitted to the liquidator. Here statement of affairs means it will include the assets and liabilities, total assets and liabilities. That statement is prepared and it is finally submitted to the liquidator. So like this, the liquidation takes place. Here liquidations are two types. One is compulsory liquidation, second one is voluntary liquidation. Voluntary liquidations means there are two parties will come. One is members, means shareholders of the company, and the creditors of the company. If the shareholders are willing to wind the company, if the company is having strength or in solvent position, and in that position, if the members are decide to liquidate the company at the time, such liquidation is called as members voluntary liquidation. If the creditors conduct a general meeting and if they decide to wind up the company, that means it is creditors voluntary liquidation. And finally, the compulsory liquidation means it is the liquidation as per the guidance or order of the court. So like this, there are two important types of liquidations, and I hope you have understood the liquidation meaning and the types of liquidation. Thank you.